Well, for more on the fluctuations in the market, we're joined by George Noceti, Morgan Stanley financial advisor. The Dow has just plunged in the past couple of weeks. Give us your thoughts on the trade deficits.
It would have been nice if we were on vacation this week and we didn't see anything. But if you look back a couple of weeks ago, the S&P 500, the Dow, NASDAQ, records. And now 2 weeks later, we saw Monday the market just crash, and Tuesday followed the same. Wednesday we had a dead cat bounce, and Thursday and Friday were not good. You know, why did this happen? Well, the market is based on two things. It moves on fear and it moves on greed. Over the weekend, we saw the fear factor. The president sent out a tweet and he said, we're going to take these tariffs seriously. We're going to take the next $300 billion worth of goods coming into the United States. We're going to put a 10% to 25% tariff on it. That scares the heck out of the stock market and causes this fluctuation.
And with this volatility that we saw, what does that mean? Where does it take us?
Well, it's interesting because if you look at all of our economic indicators, like our jobs report's pretty good, our earnings reports that have come out are pretty good. They're a lot lower than they had been the previous year. And the first quarter GDP came out, that was 3.1%, great. But the second quarter just came out, it was 2.1. And at Morgan Stanley, we're projecting lower than 2% next quarter and a little bit higher the fourth quarter. All in, it's a 2% economy. Yeah. And then you overlay tariffs on that, it scares the market and causes this euphoric market to drop and have a 10% correction.
And when people look at this, and some people are overly sensitive and they see the market turmoil, they think recession. Do you think that's on the horizon?
Well, we're hearing the R word a lot. And it's interesting because Morgan Stanley just put out an investor poll of our high net worth clients in the Bay Area, and 8 out of 10 are projecting a recession by the end of this year. But our economists at Morgan Stanley don't think so. We really see the potential recession about 20% happening after the 2020 election. No president other than Calvin Coolidge has been reelected for a second term when the economy is in a recession. So it's really important that we work out this 2019 problem and get the economy heading forward. At least that's what the incumbent president would like to see happen.
So not this year, next year?
After the elections.
After the elections.
Yeah.
Okay, and then tell us real quick, if you're a passive investor,
sure,
what should you be doing right now?
Well, if you're passive, it's great. Don't look at the market. Don't be troubled by this 1 week period of time, because you're really looking at the long term. There are as many bull markets as there are bear markets, except the bull markets last longer. So if you're a passive trader, just enjoy it. You're going to be okay. If you're a day trader, though, you're going to have a little stomachache tonight.
And then quickly before we leave, I know you say, I don't have a crystal ball, but the S&P 500 at the end of the year, what do you think? Give us your prediction.
Well, here's what we've said all along from the beginning of the year. Best case scenario is 3,000 in the S&P 500. We're slightly below that right now, and that would be another record. We think the average case is about 2,700, which is still a 10% gain off of the beginning of the year, and our worst case is back to 2,500.
Sure. Okay. Yeah. George Noceti, thanks for coming on. We always appreciate it. Morgan Stanley financial advisor. Alex?